The 2024 predictions for the housing market were wrong. I've been talking about how it feels like the momentum was there at the beginning of the year and now we're losing all of it. Well, Fannie Mae just came out and said, you know what, we're revising what we said, and they're not the only ones. So let's get into what's going on and talk about what's happening not only nationally, but here in the Phoenix area. So first, Fannie Mae no longer expects mortgage rates to drop below 6%. That's a bummer because we were all quite excited about rates hopefully going lower. They're saying that they believe that this dual affordability constraint, meaning that we have high home prices and high mortgage rates, is going to make an impact on home sales this year. Not surprising. Last month, they said that they would expect to see a drop in interest rates to 5.9% by the final 3 months of the year, and existing home sales would total 5 million. But they've since revised that forecast to say rates will average 6.4% during Q4. And 4.91 million homes are expected to change hands this year. Mainly, the market will be driven by people who are forced to buy and sell because of a change in their life, maybe a job move or a death or a divorce, those kinds of things. It's not going to be just casual buyers and sellers who want to, upgrade and that kind of thing, just because these rates are not budging and neither are prices at this point. So they've revised what they expected. It should be a weaker rebound in 2024. Now, all of that, we'll see how that holds. Obviously, it hasn't been very long for this year to play out before they've made a change. So they could make a change in another 3 months. Who knows? And we'll see what happens. But let's talk about rates, because last week, the Fed met, and overall what they came out and said is that despite some hotter than expected inflation data, they are keeping the federal funds rate where it's at. They didn't cut rates, they didn't hike rates, and their outlook remains relatively unchanged for the rest of the year. Now, there are a couple different perspectives. So the Chicago Fed president said 3 rate cuts in 2024 are in line with my thinking. And he's basically saying that even though we've had some hotter than expected inflation readings lately, it's hard to believe that all of the data that we got through the last half of 2023 is not true or not an indication of the progress that we're making. And so he seems to think that 3 rate cuts this year seems reasonable. And then the Atlanta Fed president says just 1 rate cut this year. So we've got some varying opinions. We'll see what plays out, but it was pretty clear that they are going to, continue to watch the data. They're not making any moves right now. And if there are rate cuts, it's not going to be until later this year. So more to come there. As I always say, this is not the mortgage interest rate. That is a whole different thing, but mortgage interest rates are affected by what goes on in the markets and specifically, what the Fed says as well. So what happened at the end of last week, though, was great for mortgage rates. They are now the lowest in nearly 2 weeks. That was as of Friday. So by the time you're seeing this, that could have changed slightly, but that's where we ended last week. And it was good news. Next week, meaning this week, has less by the way of consequential calendar events. So basically saying they expect things to kind of stay steady this week. So if you're a buyer out there, hopefully there's not a whole lot of change in rates unless it's downwards, of course, but doesn't seem like there's a lot of market moving activity happening this week. So where we ended at the end of last week is a positive thing, and hopefully if you're able to lock in your rate and you're at the right time there, you might have a rate that you're happier with than you would have been 2 weeks ago. Now, also, let's talk about existing home sales, because a few weeks ago, I was talking about how new home sales are outweighing existing home sales by a lot. And there's kind of this divergence of 2 different markets going on. And new home sales really have been leading the charge and the stronger area, largely because with new home sales, builders are able to help buyers buy down their interest rate by providing incentives and make it a little bit more affordable for them on the monthly payment side of things. But we've seen a change. Existing home sales shoot higher. Inventory also improves. So they are saying that the National Association of Realtors reported that single family homes, townhomes, condos, and cooperative apartments sold at a seasonally adjusted rate of 4.38 million units. It's an increase of 9.5% from the 4 million unit pace the previous month, the largest monthly increase since last February. So we've just seen this complete change in existing home sales that was not expected. And I wanted to see if this was also happening in Phoenix as well. So I pulled up our sales per month, and here we are. Let's see, right here in March of Q1, and this doesn't look all that high, but if you look at February, which is what they're calling out in that article on a national scale, that the February home sales came in higher than expected. This is for existing homes. We had the same trend here. So we can see from January to February, there was a pretty big increase there. March is not completed yet, so we'll see where that lands, but we are seeing that same trend here in Phoenix. Now, as we talk about home sales and what's going on with supply, according to Redfin, supply climbs 5%. This is the biggest increase in nearly a year. They're saying that we've seen the biggest year-over-year uptick in supply since May of 2023. New listings rose 15%, and that's the biggest increase since June of 2021. So they're saying that this surge in new listings is actually bringing buyers back to the market. Typically, as we see mortgage rates go down, that is what brings buyers back to the market. But they're saying this increased number of listings and choices that buyers have brought some out. It's kind of tempted them to get out and see what's available. They saw that mortgage purchase applications and requests for home tours through their systems was up each roughly 9% month over month. So Redfin is reporting a little bit more activity in the housing market, especially on the buyer side. And so if we look in Phoenix on what's been going on with active listings, we are slowly climbing. It's not a really big change week over week, but this is definitely headed upward. And as I've pointed out before, it's the highest number of active listings on market that we've seen in the last few years, especially this time of year. And if we look year over year, from last year in March, we have about a 17% increase, between the two years as far as our active listings on the market. So we're definitely seeing more inventory this year. And again, it's climbing. It's not going crazy, but we're kind of on that same trend as Redfin is reporting. Now, I mentioned that at the beginning of the year, we were talking about the two different types of housing markets, from new construction and resale homes. Now, the latest in new construction sales, we actually had U.S. new home sales fall. The median price is the lowest in more than 2.5 years. And I was kind of surprised to hear this. Sales of new U.S. single-family homes unexpectedly fell in February after mortgage rates increased during the month, but the underlying trend remained strong amid a chronic shortage of previously owned homes on the market. They're saying that builders are ramping up construction and offering price cuts and other incentives, as well as reducing floor size to make housing more affordable. So where we're at with new construction, they do have the opportunity to be more flexible in their pricing. It's talking about how they are stabilizing, they're building cheaper, and they're also building smaller homes. And with that, they're able to adjust prices, give more incentives to buyers, and try to continue the momentum in the new home market. And so that may be one of the reasons why we're seeing a lower price on new construction. So if you're a buyer out there and you feel like the mortgage payment for that home you're looking at is going to be too pricey if it's an existing home, you may want to take a look at new construction, because even if you don't have time to wait, they may have spec inventory that you can look at, that you could be in the next few months. They can negotiate a little bit with you as far as the price or the incentives and interest rate and that kind of thing. So don't turn your back on new construction, because you may have a better shot at getting into a new construction home and being a little bit more flexible there on price and where your monthly payment ends up. By the way, if you're looking for more information on that, check the description below. We have a link to some resources for new construction opportunities here in the Valley. Now, if you're looking for an area that could be a place of future investment, I thought this was a good article to share. Home builders snag nearly 1,000 more lots in the East Valley, even more purchases planned. So this is looking specifically around the Santan Valley area, and they're saying Santan Valley is the new Southeast Valley. It's going to grow to Apache Junction and down the Hunt Highway corridor. Water and sewer are all resolved. It's going to explode, especially with the new LG battery plant coming and all the employment opportunities. So Landsea has been purchasing a number of lots, and they have plans to develop this Santan Gateway community. So that may be a place to look into if you're looking for new construction homes. The prices seem really competitive, between $349 to $479. So at this point, you may feel like it's a little bit further on the outskirts, but I'm sure there's going to be a lot of future development there. And it could be a good place to invest to see your home value increase over the years. Now, every week we're always looking at the Cromford Market Index to really measure what's going on in the market and how strong things are, if it's a buyer or seller market. But there's also another indicator that is worth checking out, which is the listing success rate. And this listing success rate is currently hovering around 80%. This is higher than it's been since last September, and it's a pretty good reading. So the Cromford report is saying that the long-term average is usually around 70%. So where we're sitting today is pretty strong, and it means that about 4 out of 5 listings end up actually selling rather than being canceled or expiring. So as a seller out there, that hopefully helps set an expectation for you that your success of actually selling your home is pretty high right now. Now, that doesn't mean that it's going to sell in the first weekend and over the asking price, but it does mean that the likelihood of it successfully being sold, especially if it's priced correctly from the start, is there. So moving on over to the Cromford Market Index, we're sitting today at 113.9. This has been going down every week. Our demand is about 79.8, which is around 20% below normal, and supply at 70, which is 30% below normal. So we still have this gap between supply and demand, although it is getting closer. Supply has continued to increase very slowly week over week. And so we're just in a bit of a seller's market, very, very weak seller's market, very close to a balanced market throughout the entire valley. If we look at every city, we're seeing a lot more red arrows here again this week. The average change in the CMI month over month is 0.1% this week. Last week it was 0.4%. So it lost a little bit of momentum, but pretty minimal. And if you'll notice, only Mesa and Avondale are the 2 cities that had a pretty significant increase for sellers. All of the others were pretty minimal or they declined. So we're definitely seeing a softening in the market. So if you are a seller, just know that especially depending on the city that you're in, your advantage is softening a little bit, not significantly, but you're definitely, we're not moving as a whole in the direction of a seller's market. Things are kind of moving closer towards balance. And then we have a few cities that are in a buyer's market like Buckeye, Maricopa, Goodyear, Queen Creek. Paradise Valley and Surprise and Cave Creek are all in that balanced range. And then Peoria through Chandler sitting in a seller's market, some being stronger than others. So that's a scoop on resale. If you're interested in more of those new construction homes, make sure to check the description for those resources that I mentioned. And if you've been considering selling your home and just want to know what it's worth, we have a link for an instant home valuation below. So make sure to take advantage of that. And anyone who's an investor, if you haven't seen my latest listing, make sure to check out this video right here to get all the scoop.